Okay, we're live. I'm just checking the YouTube. Let me for some reason the event went as unlisted. I want to make sure it's actually listed here. Um, so let me grab it real quick. Oh, there we go. Okay. All right. Well, here we are. Let's get going. Today I'm here with Simon Severino from strategysprints.com. Hey, Simon, how are you doing today?
Hey, Casey. Hey, everyone. So cool to be back here.
Yeah, you've been on the show before and we talked about Bitcoin and your great system for how to invest in crypto. And you've taken that system and learned and developed and improved. And now you're going to talk about how you're going to do it with investing and not just crypto, but also with stock investing as well. So I'm really excited about hearing how you go through the process, because one of the things that since I've known you, Simon, is that you're absolutely amazing at developing processes and systems, and you think you're a systems thinker. And I think that's one of the things that I am missing in my life, and a lot of business owners and investors are missing. And so I would love to get that perspective on how to systematize our market investing and trading.
Absolutely. And, just to be completely transparent, I am not the best investor on the planet. I'm not a trader. My main job is I help people create revenue systems. That I do since 21 years. And I had some decent success. So at some point, I had financial freedom and a business that runs independently of me. And I had some money to get working, and I had no idea of how to do it. And so I started doing something, and then I quickly realized, oops, that doesn't work. So I sat down to oh, the video does this again. I'm back. So I sat down to think about, wait a moment, what am I doing? Why am I losing money? That's not the idea. It should work for me. Um, and so I sat down to write down what are my mistakes, and that became the system. The system is basically writing down my decisions, learning from those decisions, and making them better month by month. And when you asked me to come over, I even sat down to write them down, and I felt like little Ray Dalio who has some principles. So it felt great, and I'm happy to share some of those.
Simon, I also read the book. We'll include that link in the description of the podcast. But for me, principles are so important, right? To get a set of guiding principles that help guide your life, helps you with creating your processes, helps you with decision making, and helps you just overall generate the life that you wanted to, and a successful life. And I think it's very powerful. And that's one of the things that I see you've done here with your system, and I love it.
Yeah. So let's jump into it. Investing, in my case, means how to ensure a strong position in any moment. What is a strong position? So I coach entrepreneurs. So the main thing that they need is revenue systems. And then those revenues, the profit part, it's really important that they build assets with that profit part. Otherwise, you are always working. And by working, you don't build any wealth. There is a limit to that, and you might burn out. So it's really important that your capital, your assets also start working for you. So when I say a position of maneuverability, my my hero is Warren Buffett in this, because if you look at how Buffett maneuvered themselves, even right now, he's very cash heavy. Yes, he owns a lot of Apple, but also a lot of cash. And not just because there are no opportunities in the market, there are some opportunities right now. He wants to be in a position of maneuverability. So whatever happens, he wants to be ready to buy. And so if you think of a position of maneuverability, you have kids, I have kids. It means even, how you eat, how you sleep, the words that you use. Are you bringing yourself in a position that you have optionality or not? So that this is my definition of a being in a strong position in any moment, as so that you can change direction and you can use opportunities.
Okay, well, I like that, but I'm not sure I quite understand it because Warren Buffett has cash and he's always got cash. So you're saying that you have strategically planned to always have cash at all times. And if that's the case, I want to know how you do that, because that's actually a problem for me, is because I'm very much what is called a opportunist. And if I see an opportunity, I love to go all in, and that means I don't like to leave a lot of cash sitting on the table. So this is a foreign concept to me. But then there's a lot of times I want to learn about it, because there's a lot of times in my life where I want to invest in something else, but I'm out of money because I put everything in. So I want to know how you can actually always have cash on the table.
Yes, and I am the same as you. When I see an opportunity, I want to go all in, very concentrated, very early, very big. And guess what? You need dry powder to do that in that moment. And so my learning was, like, for example, 2 years ago, I was all in Bitcoin and Solana. All in, zero cash. And what I realized soon later is, okay, but the next opportunity I cannot use, actually, because I was all in. And let me show you on a very in practice what this means. So first, I define for me what is my dream life. I call it the rich life. What's the rich life? I want to read every day, and I really recommend everybody does that. What's your ideal day? What's your ideal life right now? Not later on when you're super wealthy. Right now, what's your perfect day? So to me, the rich life is reading every day, a life where every day feels like a vacation. I don't want to work. Whatever happens, I can quickly leverage it. So if there is a crash, I can buy. If something pumps, I can sell. Whatever happens, I have multiple options. If the sun shines, I can quickly cancel meetings and go outdoors with my kids. I have defined what a rich life means for me, right? And there are other principles. So that was the first part. And then the second part is to ask yourself, why do you like investing actually? So to me, it's fun. I like the process itself. It creates optionality. It helps me think in decades instead of in hours. I get to set up my own rules, and I love that. I learn about my fear and my greed. I create multi generational wealth for my kids, and I learn to take better decisions quicker. And the reason, really, my purpose as a coach is I want to help people have a life where every day feels like vacation. And this is something that even Warren Buffett was striving to do.
You
For
know,
him,
Simon, I love this quote because, and I don't want to like, I don't know what to say about it, but I just want to share why I love it. I was able to leave my work job when I was 32. Okay. So I'm now 47. And I feel like I say what I've since I'm since I've been 32 years old, I've been able to say what Warren Buffett has said, right?
Boom.
And I I get to do whatever I want. I tell people that I retired at 32. Now, does that mean I don't work? No, but I like to work, right? I like working, but then I get to define it how I want to work, when I want to work, at if I want to spend time with my kids, I do that. If I want to go across the country with my family in a van, all 11 of us, 3,000 miles across the United States to visit my parents and take a month or so in the summer to do that, I do it,
Exactly.
And so I just wanted to really pause here because when you said that you can do it now, you
Mhm.
actually can do it now. And I don't want people to be looking at their circumstances and saying, well, I don't have any money or I'm not making enough money. The thing is, it's a process. And I was in the exact same situation that everyone else
Yeah.
was in.
Let's double click. So, what is I don't have any money? You just need slightly more profits than costs to be in this situation. If you have $1 more profits per week than you have current costs, you are actually living that. So let's move on. De-risking, because rule number one, don't lose your money.
That's a Warren Buffett rule, isn't it?
Absolutely. And it's just a life rule. So you have to think about the risk. And whatever rules you come up with, just come up with rules. So my de-risking is on a portfolio level, because on an asset level, I want to go very hard, full in. I don't diversify on an asset level. I diversify on the portfolio level. So my net worth is in 3/3. 1/3 real estate, that's the conservative part. 1/3 equities, that's an aggressive part. 1/3 digital asset, that's hyper aggressive.
Okay, now you had mentioned earlier about cash. Do you have cash in that equation?
Yes, but cash is in my world, my cash is in the equities part. I have 10 assets, one of them is cash.
Okay, so
9
you
are
include that
assets.
as an asset, cash.
Yes,
Yes. So
this is
one
how I
tenth, you always have 1/10 of your equity money in cash.
10% of my equity money is cash.
Okay, I'm going to ask more questions as you go along about that because
Yeah.
I'm curious more about how that works. Okay, keep going.
So I have to balance it. So I have a spreadsheet, and on the left side, I see my current portfolio, and on the right side, my target portfolio. I am never perfectly on target, never, because you cannot time the markets. And also,
Ah,
it rebalances continuously. Like last week, my Solana shoot up 60%. So it rebalances itself all the time. And it's never according to my plan, it's according to whatever the market does. I'm 90% in, so I the market changes my balance all the time. The second important thing is compounding. This is what I've learned recently, because I used to sell too early, to take profits pretty quickly, 10% here, 20% there. And what happened is that I wouldn't let the compounding effect work. Because if you look at, for example, $1,000 at 10% for 30 years, that's 17K. For 40 years, it's 45K. For 50 years, that's 117K. This is what Warren Buffett did. He just uh, had gave his portfolio time to compound. Um, and this is something that I forget, because my personality is, all right, let's jump in. Like 3 weeks ago, I wanted to flip everything into Solana, everything. I didn't because of my rules. Would it have been a good idea? Yes, but not a risk adjusted great idea. And that's the slight difference. As a father of three, I want the risk adjusted return, not just the return.
Because you're thinking about risk first, not
Exactly.
reward first.
Exactly. And that's why I remind myself of Warren Buffett, who was holding things for 30 years. He's holding Coca-Cola now for 34 years. And I remind myself because I would immediately get out, and I many times I get out too early. For example, I sold Nvidia after holding it for years. I sold it last year, and that was a bad idea. I should have kept the winners, even if they are boring for a while.
Right.
And so I learned from that mistake.
And now, at what point do you make a decision though? Do you have an actual process of when a stock is no longer
Yes.
fit? Because I actually think that you sold Amazon too, and
Yes.
Amazon's recently had a really good comeback.
Correct. So I made a ton of mistakes. One was selling Nvidia. One was selling Amazon last year. I'm back into Amazon this year, but it was a mistake. So, and I'm learning from those mistakes. So, first of all, I'm looking at the history of things. There are many reasons. This is just for the people listening. I'm showing a chart of the last 100 years in the market and all the reasons why you should sell. Hey, this is happening. You have to sell. So, we have hundreds of moments where sentiment tells you something. But if you zoom out, overall, the market has just gone up. So instead of looking at the news, I don't watch TV, I don't look at the news, I don't read
Me
newspapers.
neither. Me neither.
I just do my studying. And my studying is very boring. It's trading view and it's fundamental analysis and it's charts. Very boring. It's just numbers in a spreadsheet. So my studying, I look at a few metrics that really matters. It's sales growth rate, operating profit margin, and incremental investing rate. So are they making a ton of profits? Are they growing fast? And are they able to reinvest into growth? And are they committed to reinvest into growth? Those are the few metrics that matter to me. And there is one guy in particular that I learned from, and that's Peter Lynch. And he said, you know, most fund managers, they have to diversify, but you don't have to. So you can concentrate. So dare to concentrate.
Okay,
And
so I want to ask about that. I feel like you don't want to diversify too much because if we look at the 80-20 rule, which is one of the big things that I always look at in my processes, is that 20% of the stocks are going to create 80% of the gains in the market. And then
mhm,
the 80-20 rule is also fractal. And so that means that if you take the top 20% and then there's a top 20% of the top 20%. So you go and you first find the top 20% of the stocks, then you find the top 20% of the top 20%, and then you just invest in those. So that means there's only a real handful of stocks that you want to invest in because that's how you're really going to get wealthy. If you just have a huge basket, you're going to have some of those they're going to drag you down. You
absolutely.
just got to get rid of those.
Get rid of those. This is why I've never bought any ETF, any index, or any basket. I pick 9 stocks and I go hard into the top two. So right now, in my equities, I am 90% Tesla. In my crypto basket, I am 90% Bitcoin. So even inside of that, I go very heavy, very concentrated. Now
And,
I will take some profits. Let me show you maybe the current portfolio. So, and then we can go to how I research, right? So I have a risk curve because my most important decision is when do I go offense, when do I go defense? So this is the risk curve with my whole portfolio. And so I have some defense plays, Visa, Hermes, ASML, Google, Meta. That's my defense. And then I have my offense: Amazon, Bitcoin, Ethereum, Tesla, Solana. They are very risky, but Solana, I expect an 8x from here.
Which one is very risky?
So the right side, risk goes up to the right side. For the listeners,
Okay.
on the right side in the risk department of my risk curve, the highest risk is with Solana, Tesla, Ethereum, Bitcoin. And then in the middle, we have Amazon, Meta. And then for me, the safest, but also where I expect less growth, that's Google, ASML, Hermes, and Visa.
Okay. I would not necessarily think those are riskier, personally, because there's just so much growth potential. How do you just how do you define your risk?
So growth rate and variables, what can go wrong? So moat is, for example, something that de-risks. Visa has such a great moat. Even if Solana is coming for their lunch, Solana will not eat Visa in the next 10 years. Visa has such a strong moat. It has 80% net profits, but it grows only 11% a year. So I expect a 2x in Visa every 4 to 5 years, which is very, very slow and boring. But that's my defense part. Same with Hermes. Hermes will not grow a lot per year, but it only spends 4.5% on sales, on ads. 4.5%. You know what that means? That means there are only two companies on the planet that spend this low for customer acquisition. It's Ferrari and Hermes. Just as a comparison, one of the competitors, Louis Vuitton, they spend 16% on customer acquisition. So what this tells you is they have a moat. A moat is something that you see when you have low customer acquisition, you have a lower effort to bring in new people, and when you command the price versus you are a price receiver. So they are a price commander. That's why, to me, they are safe, because there is not so much that can happen to them. On the right side, Solana has legal risks. The SEC can ban them. A
Right.
country can ban them. Nobody will ban Hermes or Visa.
That is true. Yeah. Yeah. And they also have a much longer history of success. Right? They have
180 years.
yeah.
Hermes is a family that's operating since 180 years. And they are owners led. So yeah, these are all the variables that go into classifying as risky or safe for me, defense or offense. And if you look at how I, let's look at the current portfolio, and then we can jump wherever you want. So those are my current assets, and you see it's 9 assets because number 10 is cash. And then there are 3 real estate positions. And what I've done is because I want to learn to keep the winners. I don't want to sell my NVIDIA again too early. So now what I've done, I've printed this and framed it
Beautiful. I
with
love
frame.
that. I absolutely love that.
And there are sticky dots here with the year that I entered. So this is 2013, I entered this one. And so every year in December, I put a sticky dot. I add a dot. And so when I look at it, it reminds me to stay patient, to not sell the winners. So now let's say Amazon has a bad year. I'm back now in Amazon. But let's say next year would be a bad year for Amazon. This system now manages my emotions, because it's a higher threshold now for me just to sell it and to flip it into something, because I have to go to the frame, I have to print it again, I have to look myself in the mirror and say, again, you weren't able to hold a winner long enough. You see, I'm creating
Are
more,
you thinking about getting Nvidia again? Because there's still a lot of potential there.
you know, I'm not, I'm not. I have a limit order for NVIDIA, but they run away from that. They will never get back there. I missed the
You
train.
can't say never. I mean, there could be a down year or a significant pullback at some point, which might get very attractive. You
Let me
never
look
know.
at the chart.
Yeah.
Let me look at the chart. NVIDIA. I want to enter at 368. They are now at 478. I don't see them coming back. To me, the fair value is 472. This is when I want to enter. So is it a great stock? Absolutely. But I don't enter without a, a reasonable 20% edge. I want to enter with an edge. I either am early or I use a V-shape moment or a U-shape moment, like a huge dip. But I wouldn't buy something at fair value.
Yeah. Now, like if you look at the chart, the daily chart, it shows that there was a really nice pullback from November of 21 all the way back to October of 22. Now
Yeah.
that would be the time that you'd really be looking like, okay, this company is so good. I'm going to be loading up, loading up, loading up. That's the time I want to get into this thing.
Absolutely. I missed that. And so I move on. I do not chase. If something pumps and I missed it, I missed it.
Yeah. Now I just an interesting little uh, sidebar, because you and I know each other and communicate on occasion. You had mentioned Applied Materials as being a pretty good um, play in that same industry, in that same space. Not as high powered as NVIDIA, obviously, but instead of getting NVIDIA, I went with Applied Materials, but I still have it. And I initially started getting in, I think sometime around November, and I've it's been really good, and I'm going to hold it for a while. I like it.
It's a good one. I had fun with that. Yes, when I shared in the JVC that I'm entering Applied Materials, I went in with the idea of a quick swing trade. It was from the cash position. I went
Got it.
in for a couple weeks. I made 30%. I went out. I think it was after 3-4 weeks.
Now, do you have a piece of your portfolio here that is designated for like just to maybe scratch the itch a little bit? Like, oh man, this is a good trade. I want to do a swing trade. Do you have like a section for that kind of stuff?
Yes, that's my 10% cash. With that
Okay.
cash, I can play. So if next week Nvidia would wick down to those levels that you described, I would 100% put my cash into Nvidia and swing it for a month until they're back, because they would be back. They're so strong, they would recover. I would swing that, and then I would have 15% cash after selling that. And with that 5 I would put again into more conservative things, into Visa, into ASML.
So that helps build your holdings. So you could technically use swing trading to help build your holdings and just grow your portfolio. Now, another question is when you buy a position out of your cash, do you then have to sell something else so that you maintain your 10% cash level?
No, it's just for a couple weeks. My swing trades are short, like 3 weeks, 4 weeks, in and out, max 6 weeks. And I have recurring income. This is where my money comes from. The swing trades are just for fun. I do maybe 3, 4, 5 a year of those. They're just for fun. So the weekly dry powder comes from my business, from Strategy Sprints. This is where the dry powder comes from. And every week, 10% of the profits get invested. After
into
that,
your main
I
portfolio.
spend into my main portfolio,
Okay.
those nine assets. And depending on who's cheap. So right now, of those 9, I find Bitcoin is not cheap anymore. So in Bitcoin, I'm in waiting zone right now. My accumulation area is over.
Got it.
But Google, ASML, and Tesla right now, according to my estimation, it's very subjective how you calculate the value. But to me, Tesla at in the low 200s is fantastic.
I agree.
212 right now. So this week, I'm for sure adding Tesla.
I agree, and that's a great way to do it. So then you have your portfolio, and then when you're adding positions, you then weekly or whatever you do, you decide, okay, I'm going to add this one, and this one because they're lower, and
Exactly.
that's a great idea because if you add when it's moving down and then it comes back, it's phenomenal, absolutely phenomenal to see the growth rate. And I do that with growth stocks, and that's a little riskier. But like for example, one of the stocks that I've been doing that on was Coinbase, and Coinbase had a huge bear market, very similar to when Bitcoin was going down, and I just kept adding, and my first position was in at like 300. It was just, and it just went all the way down to 30. I mean, people would be like, "Oh man, you are the worst," but I kept adding, and I put a really big chunk in right around the 30 area, and then by the time it bounced, it got like to $60, and I was already in net profit, even though my first position was at 300. And if it does go back up to 400, the amount of profit that I'll have on that one position is pretty astronomical.
Mm. And probably one thing that your listeners are curious about is, all right, this works for stocks, but how do you actually value a digital asset which has basically no use case, no revenue streams, right? There is, it's just a speculative asset. So do we just trade the chart, or is it anything like fundamentals that we can look at? Should we go there?
We could, and I would actually like to do both. I'd like to see what your selection process is for stocks and for cryptos.
Oh, cool. Then let's do the stocks first. Um, with stocks, I look at quality and at valuation. So quality means first, I need to have personal interest. So do I want to study them every week? Because otherwise, I will miss the dips, I will miss the risks. So my personal first criteria is, do I have personal interest in this stock? Like I just enjoy watching the news about Tesla, about Hermes, about Visa, because I like them as a brand. But I could never, for example, Sea Limited is right now a super interesting stock. I think if you want to swing trade that, you it's a wonderful stock right now. Very cheap. It's basically the Amazon of Singapore, and it has a gaming component. So I think it's an explosive opportunity. But why is it not in my portfolio? Because I have no personal interest in studying it every week. I don't care. And so the second is the product great? Can I use the product, try the product? So for Visa, I use the product. Everybody uses the product. I see my friends using the product. It's a great product.
Everybody uses it.
Everybody.
Like everybody.
Then operating health, financial health, industry quality. There are 3 industries right now that interest me. Everything else, I don't care. Management quality. Can I trust their management team? I was, 1 month ago, I was in Enphase. I sold at a loss because I stopped trusting their management. So this is the moment when I sell. I sell when the fundamentals change, or when I lose one of these criteria. So if I cannot trust management, I'm out, immediately out. I don't care if I'm a profit or loss, I'm immediately out. So I went out end phase. I had a new slot. That new slot went to Amazon. And I don't care. I want to be quick out. I don't care if I'm losing 5%, 10%, 20%. I don't care. I'm out.
I mean,
Then
if
number
you can't
7,
trust it, you might as well make that move. I think that's a good
exactly.
qualifier.
Exactly. And of course, I need to find something that will grow 3x. Otherwise, doesn't make sense. So I would sit on cash, but there was a great opportunity with Amazon. I went in. Then growth. I look at competitive advantage of defendability and durability, um, culture, and different risks like legal risk or geographical risks. And I want them to be debt free, high free cash flow, zero debt. And then I need personal conviction.
Okay, interesting. The zero debt and high free cash flow. So, what does the so zero debt means that they don't have any debt.
Mhm.
Then high cash flow means that they also have to have a large stash of cash for moving on opportunities.
Yeah, exactly.
Okay. How does the debt thing work? Because I was always under the impression that companies take on debt to grow, right? So debt can be leveraged as a way to create growth, but it can also be dangerous. It's a double-edged sword because if interest rates go up and you got to pay that debt down and the economy slows down, you have this tremendous growth rate and now you got to put all your money back into interest payments, you could be in trouble.
Correct.
So you have to so that's actually a good idea to avoid companies that have that.
Yes. And in general, most companies grow by taking on that and reinvesting that into product and into client acquisition. But there are some, and it's just 2% of the S&P 500. And you can find them that can grow without that. And those, they are rare, but they are there. And those 9, most of them are debt free. That's why I take a lot of time to study. I go into TradingView and I look at all financials in detail, and I listen to all earnings calls. If they're Most of them are American, so they have quarterly earnings, and the Europeans are not um, are not. It's just optional to have earnings calls, so they do it sometimes every 6 months. But the U.S. companies, they have earnings every three
So,
months, and I
in
listen to
regards
those.
to Tesla, where are they standing right now in their debt ratios? Do they have debt or are they totally debt free?
Let's go to TradingView right now. I click Tesla. I click financials. You can see free cash flow, year over year growth. You can look at the balance sheet, total debt, 8 billions. Net debt, minus 18. That's positive. Book value, 16 billion. Total liabilities. So I look at it every week. I look at income statement, balance sheet, and cash flow and see where they are at. They can miss one if I see that they are actually very intentional in how they take on debt. I might even um, enter if they have debt. For example, Enphase, I entered and they were high in debt, but they are in growth stage. So
Right.
I was okay with that. If they can show me how they used the debt, I might even go over that. But it's one of those 14 criteria on my checklist.
Okay. Well,
And since it's just 9, I will pick the top 9, and that is one of the criteria in there.
now you started by sharing a little bit about the rich life and being able to do what you want to do and your perfect schedule. So I'm curious as to how much time all of this takes because I know that you're great on systems, but you're running a business, you've got a family, you're investing, and now you're checking your portfolio every week. That seems time intensive. So how do you get your research? How are you doing the research? Do you have someone do it for you? How do you get all of the information you need?
Let me show you the the time that I allocate is an hour a day. I spend an hour a day researching, and those are some of my sources. So I don't use Bloomberg anymore, but I use Seeking Alpha, the Wall Street Journal. I use Quarter for earnings reports. I use Guru Focus for fundamental analysis. I use Data Roma to see what the Ray Dalios and Warren Buffetts are buying right now, because they have to disclose it. So I look, what are they selling, what are they buying, why. I look at Artemis for the digital assets, fundamental analysis. How many users has Solana? How many users has Bitcoin? Are the number of wallets going up? Are the transactions going up? I use Twitter and I use YouTube.
I really like Data Roma. That is such a good resource.
Amazing.
Yeah. Like
Amazing.
think about it. You're getting access to the big boys, and how much money and time are they putting into the investments, right? And
Yes.
so you're getting top quality analysis there.
Yes, it's really good. And then I look at valuation. Valuation, for example, I rely on Guru Focus for their discounted cash flow estimates. Then I run my own, and something in between I then take as the current number. And I say, okay, this company is at fair value or below fair value or above fair value. I quite trust them. They do good work, but I never use one data point to base my decision on. I want multiple points. And then the digital asset checklist is a bit more complicated. So in this example with Solana, I look at, does it solve a problem or not? So does it actually have a use case? In this case, it's green. Yes. And
So tell me what the problem for Solana is.
Faster, cheaper transactions.
Okay.
Can I send money to my buddies fast and cheap?
Okay. Let me ask you a question then. Do you use Solana for transactions? Do you send money to people with Solana?
Yes, I use it.
Okay.
And I used many so-called dApps, decentral apps on Solana. They're amazing.
Okay. So primarily for me, and everybody's different, I use Bitcoin for sending money, right? Mm-hmm. So if I have somebody that's overseas and it's difficult to send them money, I'm going to use Bitcoin. I have not tried Solana. Maybe I should. I don't know. Bitcoin is very simple for me.
You know that I'm a runner, so every day I run. There is a dApp built on Solana. It's called Steppen, which measures your steps. And per steps, it gives you some rewards. So that's built on Solana. And every day when I run, I get paid some cents for that. Let's say.
You know what? I'd probably run so much I'd kill myself.
Yeah.
If I'm getting paid to run.
Yes, you get incentivized.
That's great. I love Solana, that. For example. I also run too, so I should check that out.
Check it out.
Yeah.
Then I look at decentralization. Is it decentral or centralized? So there is the Nakamoto coefficient. I look at number of miners, number of validators, number of nodes, number of users. The second thing is, does it have a network effect? So is it a two-sided marketplace or a one-sided marketplace? What is an incentive for the users to use it? I look at competition risk. Is it easy to copy or hard? For example, Sushi Swap was something that I quite liked as an asset, but I didn't buy it because it's actually very easy to copy it. And now, a couple months later, you had already people copying it. So I even if I like it a lot, I don't enter because it's too easy to copy. For example, Injective is an amazing digital asset right now, but I don't think it's defendable. So you might swing it. I think it will do really, really well in this bull market, but it cannot be one of my top 9 because top 9 is multiple bull markets, not just one. Uh, is there inflation risk? So what's the on DeFi Llama, you can check the total value locked versus market cap. And so you can see what's right now in circulation and what will be in circulation. Because every time you bring more into circulation, you are deflating and that creates price pressure. So there are amazing assets right now that I don't own because I know that they are not deflationary. So I prioritize the deflationary ones. That's Bitcoin, Ethereum, and Solana for me.
Okay.
Legal risk. Can the SEC be a risk to it? Can it be regulated as a commodity or as an equity? If it's an equity, it's at high risk. That's why Solana is red. Even Ethereum for me is yellow. But Bitcoin is low risk. So Bitcoin has green legal risk because there is already a verdict that it's not regulated as an equity, it's regulated as a commodity. So that's, for me, safe. Then velocity, is it growing fast and in the right direction? Can I trust the team? Is the community a vibrant community? And then the last bit is technical analysis. I enter when 4 things converge. RSI below 30 on the weekly, the daily that supports it. I look at trend. In this case, I look at the Gaussian channel. Trend must be green. And then I look at 200-day moving average. Are we bouncing off that? That's my favorite. Is we were below it. We are now coming back and crossing the 200-day moving average upwards. That's my favorite moment to buy. And then the last check is Bollinger Band. This is when I decide to enter.
Well, that's a pretty nice checklist there. And I would say, so you obviously don't have all of them, but that's why Solana was one of the higher risk ones. But I would say that with all of that in place, you're able to get a pretty nice win rate on your entries.
Yes, and that's why I only hold 3 digital assets: Bitcoin, Solana, Ethereum, because I have to do all this validation. I have to double check this every week, every month. I have to make sure, is this still green?
Do you have a swing or like, do you do swing trades as well? Like, can you take cash to trade digital assets as well?
There are 2 things that I'm swing trading right now. There is Render and there is Injective. They are on fire. I couldn't resist. But I'm trying to do less of it because I want to enjoy more, my kids and my wife than being on the computer so much.
Right. Yeah. Yeah. It's not really worth it, right? Because you're living the rich life. And that's one of the things about day trading. Because I get people, they want to day trade, but you got to sit in front of the charts. I know day traders that make a lot of money, but they sit in front of the charts for hours and hours. Like, the amount of hours that they sit in front of the charts is sad. And
in my case, it's not worth it because it's just 5% of my portfolio.
Right.
So even if I totally nail the bottom and the top, it's not going to change my life.
Right. Yeah. And this process that you've developed is going to really help with getting quality of life. It's not even really about money. It is, but it's about creating systems and processes that create revenue while you are having fun or doing the things that you want to do.
That's the idea.
Yeah, I like that a lot. And that's something I got to get better at for sure.
So for example, my Bitcoin plan is so simple. This is my Bitcoin plan. I think it's on the monthly and it's on the log chart, but it's a screenshot, so I can't remember if it's monthly or weekly. But basically, you see, it's such a simple plan. I have three zones for the people listening. There is a green zone. it says buy between 14K and 30K. So this is when I was accumulating. Then it says do nothing between 31K and 59K.
Right.
This is where I'm at right now. We are in the do nothing zone. And then I will start to do something again. When we are in the red zone, it says sell between 59K and 115K. Now that might change a little bit, but roughly I will stick to the plan and layer out 10% at 59 and then the next 10% and the next 10% as we enter the red zone.
Yeah, I like that a lot. And as with Bitcoin, it's been such a great opportunity. Earlier on, it was fantastic when it was up at 68,000, but then I know you were such a bullish guy on it and you didn't really care that it was dropping, and I didn't either. And
I
when it
didn't
was down
sell
to
a
like
single
15,000,
cent.
I was like, man, this, because when you have confidence, you can just keep getting in at those good zones.
Yeah, I didn't sell Bitcoin at its highest point. You were right and I was wrong, and I learned from that. And I didn't sell Solana. So my Solana was up 825%, and I didn't sell one.
Wow. So now you have a profit taking, right? You have like, okay, at least, reduce some of that position, put it into cash, because then you got more opportunity somewhere else at some point.
Yeah. Yeah, because I'm 90% Bitcoin. So I will take up to 50% out of that and recycle it into one of the 9 that is currently cheap,
Yeah.
whoever that is at that moment.
Yeah. It's going to be interesting. Everybody, I mean, it looks like Bitcoin's going into a bullish run. I really like that. I feel like it's going to take out the highs. I don't know when. I can't predict that, but I think that when it does, it's going to be a pretty significant move. I think we're going to hit 100, 120, 200, something like that. And so that's really a good area to maybe be looking at taking a little bit off the table, but we don't know how long that's going to take to get there. But I think it will.
Yes, it can very well happen. It wouldn't surprise me if it was around 2025.
Well, Simon, this has been a great interview. You've shared a lot for our listeners to think about, a lot for me to think about personally. We're going to make sure, if you're willing to, we're going to put it in the description for everybody. And
Sure.
you're a business owner, and so you help business owners. So tell a little bit about what you do and what people can do to find you.
Yeah, so I coach business owners, and my team is strategysprints.com, so they can find us there. We have communities where we have group coaching and one-on-one coaching on how to create revenue systems and also how not to lose the money that you earn, so how to invest it well. And yeah, they find us at strategysprints.com.
Excellent. So we'll have the link for that in the description. And as I mentioned before, Simon's one of the best at systems. And so if you are in business and you're listening, and by the way, being a business owner is fantastic because it is so good for investing, right? I think that they both go hand in hand. I think that creating a business which creates revenue where you're not necessarily in the business, well, you are in the business, but you can get a system and a team to create revenue. Because I'll be honest, I've got a great team around me, and I don't. Um, I work hard, which I like, but I also have a lot of free time. And so, uh, if you don't have a business, or if you do have a business, look at systematizing it so that you're not a slave to it. And Simon's really good at that. So make sure you guys go to the link, check it out, learn more about what Simon's doing, because he's definitely going to be able to help you as he's helped us today with his investing processes. So thanks, Simon. I really appreciate it.
Thank you, Casey, for having me here and for showing up so consistently for your community.
Thank you. All right. Well, that's it for today's episode. We will catch you later. And